Hello everyone, welcome back to the stock channel. Today we are understanding how the changes in the commodity prices affect the different sectors of the economy. Commodity prices have a profound impact on various sectors of the economy, influencing production cost, profitability and overall economic health. Here's how different sectors are affected. First, agriculture. Changes in commodity prices directly impact agricultural producers. Higher prices for crops and livestock benefit farmers, increasing their income and investment capacity. Conversely, falling prices can strain their finances and reduce agriculture output. Secondly, manufacturing. Many manufacturing industries rely on raw materials like metals, oil, and agricultural products. Rising commodity prices increase production costs, squeezing profit margins. Manufacturers may pass these costs to consumers, leading to higher product prices and potentially reduced demand. Third, energy. The energy sector is highly sensitive to fluctuations in oil, natural gas, and coal prices. Higher energy prices can boost revenues and profits for energy producers, but increased cost for energy dependent industries and consumers, potentially slowing economic growth. At last, construction. The construction industry is affected by prices of commodities like steel, cement, and lumber. Rising cost of these materials can increase the overall cost of construction projects, impacting profit margins and potentially slowing down infrastructure development. In conclusion, commodity prices affect different sectors by influencing production cost, profit margins, consumer prices, and overall economic activity. Understanding these impacts helps stakeholders make informed decisions in a dynamic economic environment.